What's going on, everyone? Thanks for joining us today for the 1004 show. Just talked with one of the founders of the Startup Bootcamp. You can learn about them at startupbootcamp.org. They got locations all across the world. We talked with Nektarios Liolios. Hard name to say, but I did it. He's based in London and helps the fintech version of the fintech industry of Startup Bootcamp. Some really interesting things and takeaways on how to get into an accelerator. They get 500 applications for most of their cohorts, and they have multiple cohorts every single year. So if you're looking at getting into an accelerator, these are some of the ins and outs on how you can do this. Also figuring out what major corporations' problems are and just providing them the tools to get there. Really strong stuff there. And if you're looking at potentially moving your business, or you're building a small business community, a startup community, really taking an inventory of what you're good at and doubling down, tripling down on that and innovating that industry and making sure that that is what you focus on, because all too often people will try and build industries that have zero ties to their backyard. Nektarios talks about how in fintech they built it in New York City and not Silicon Valley because fintech was big there. And so it's interesting to see that not everything is happening in the places where you think it would be. And so we talk about that. So take a listen. Appreciate your time. Would love for you guys to subscribe and then share it with your friends as well. So thank you. Let's get into this episode. We're here with Nektarios Liolios of Startup Bootcamp. You guys can learn about them at startupbootcamp.org. Nektarios, what's going on, man? How are you?
I'm all right, thank you. How are you?
Doing very well. Love what you guys are doing. Give me a 30-second elevator pitch of what Startup Bootcamp is and how you kind of came up with the concept.
Startup Bootcamp is a global network of industry-focused accelerator programs. They're all industry-backed, which means everything that we do has a group of sponsors behind it who all come from the industry, and it helps startups that are operating in that particular vertical to grow faster and succeed.
Couldn't have said it better myself. So I think it's interesting that you guys are doing vertical based. I think when you can get some strong backing behind it from those in the industry that can help really guide and accelerate those businesses to the next level, it helps. I think a lot of places want to do vertical based or industry focused, but then don't have the backing to really actually grow those businesses. And so how did you guys decide on some of the verticals that you have, and then with that making sure that you actually have the credibility to then get those kind of partners involved?
I think so I actually come from the financial industry, and that's the key thing. So I evolved after 16 years within financial services. And then the last couple of years within an innovation role, I just switched sides. And that was super important. So every program that we run that is vertically focused is also run by people who actually understand the industry. So usually what we do is we don't describe ourselves necessarily as an accelerator, but we see ourselves as industry players who sit between the large corporates who are desperately looking to understand new technologies and new business models on the one side, and on the other side, the startups who recognize that to get into that industry, they actually need to collaborate with the industry players. They need to sell into the industry. So we see ourselves as a hinge between the two sides, really. But it means that you need to understand the industry. You need to actually understand the problems of a bank or an asset manager or wealth manager, or we do digital health, we do smart transportation. It always has to be somebody who totally sees both sides.
Totally agree, and I think a lot of times when we're talking with either the founders or the directors of these businesses, these incubators, accelerators, programs, whatever they are, a lot of them don't have extensive knowledge in what they're trying to do, and so it's great to hear that you basically just flip-flop that to help that, and I think it's tremendous, and I think that's why you guys have been able to help the amount of businesses that you have. How many businesses are in your network at this point?
I think Startup Bootcamp overall are close to 500 now. Within the fintech vertical, we're now close to, Jesus, you're putting me on the spot. I should know my numbers.
Well, I had to keep scrolling forever, and I could never get to I felt like I was always in the C's and the B's and the D.
So look, we run 5 fintech programs globally with London, Singapore, New York, Mumbai, and Mexico City. And we've got an insurtech program in London and soon to launch another one in the US. So overall, that's probably about 100 startups just within the vertical. Comfortably yeah. So yeah, it's a big number.
So the world of banking is changing a lot, right? And the credit cards are now changing, whether you're using online payments. And how are you like really addressing what a pain point is with a fintech startup? Like, how do they really understand that the thing that they're trying to solve is something that banks are willing to actually adopt?
We don't actually have to do that anymore. So fintech has evolved. Fintech as a hashtag has been around for about 5, 6 years now. And at the beginning, the fintech startup that we saw were very much consumer facing. And they were looking at things like cards and payment solutions and the Venmos of this world, etc. But in the last 5 years, we've seen a really big shift from B2C to B2B. So a lot of the founders, a lot of the businesses that come to us are actually people who come from the industry. They sit within the banks, they sit within the insurers, and they see the problems there. And they're building solutions to actually address much deeper problems that the banks are having. And people are always baffled when I say that the average age of our fintech cohorts is 38. So when we talk about startups, it's not the two dudes in their 20s in the t-shirt and the sneakers who sit in a cool garage, right? It's people who've made a bit of a career in the industry and decided to take a risk because they could not feel that they can solve these problems within the large kind of slow-moving corporations that they're trapped in, and they decide to do it themselves. So there's a lot of stuff that we see in that domain.
I'm not surprised that you're seeing older groups. You know, I think you see the college students that are starting in the garage, and then you have people that have a career for 20 years and then you get into it. And so I'm not surprised that you're seeing 38. So when you're solving that problem, give me an example of what one of the problems that they're coming up with.
So fintech started with payment solutions. So it was things about, I don't know, bill splitting or a really cool user interface on your mobile as opposed to having to use some really slow kind of website. But this has evolved. So a lot of the things that we see now. So if you want to look at global trends in fintech, it started off with payments. It's moved into lending. So peer-to-peer lending and crowdfunding and all these things are part of the evolution of fintech, right? So for the last 3 years, especially in kind of the developed markets like the UK and Europe and the US, a lot of it is around investment, robo-advised, the Betterments and the Cabbages of this world. And this is where we see overall an evolution. When it comes to more specific things, a lot of things like invoice financing is a very kind of typical thing. It's given small and medium enterprises, small businesses, access to financial services that the banks usually wouldn't offer them. So this is where it becomes a bit more niche and a bit more esoteric. Overall,
so how does let's deep into that. So a bank won't do something. Why can someone in the fintech world do it?
A bank usually doesn't care that much about things that don't look particularly lucrative to them. So the whole reason we've got peer-to-peer lending is because the banks would not give people credit.
Risk
or
reward,
loans.
basically.
Yeah. Or the fact that we've got all the alternative credit solutions, alternative credit scoring mechanisms is because these are all kind of huge chunks of the population neglected by the banks because it didn't using existing mechanisms didn't sound very interesting to the banks. So the banks don't necessarily even think about the fact that these would be customers for them. That's one angle. The other one is that banks do care about SMBs, they do care about small businesses, but they actually don't necessarily have the tools to assess their creditworthiness and to figure out if they should give them a loan or not. And this is where the startups come with really nice useful tools that help actually bridge that. But a lot of the existing mechanisms don't reflect modern life. Your credit score is based on things that ultimately are no longer applicable. Nobody needs a physical address anymore to be creditworthy. But that's a key thing for a bank, right? Paper, wet signatures. I mean, the US is really interesting, especially on the payment side. Europe is a lot more evolved. So the US startups looking to solve payments problems, they have there's no need for that in Europe, right? We've got instant intraday payments where I can send through the normal banking network from my device a payment to somebody else using a mobile phone number, right? So there's a lot that still needs to be addressed.
So recently, within the last year, we got this chip reader on credit cards in the States. And to me, a swipe and a reader basically was the same thing. I felt like we were going just lateral when it went from instead of the swipe to the reader. Now I know that there's some security behind it, it makes it better, but it just felt like we weren't even really evolving in something. And so it's interesting that you're saying that in Europe you guys are a lot more evolved. You know, in the States we have so much regulation to get through. Are you guys finding that a lot of your B2B is not in the States, or are you starting to get some people to kind of
it depends. It depends, but it's you mentioned regulation, which is also an interesting thing, right? Where you see fintech really thriving, and there's hubs like London and Singapore, it's also because the regulators are very open-minded and cooperative. So you've got somebody like the FCA here, which is a UK regulator in the payment space. You've got the MAS in Singapore. You've got a few more globally, like in Australia. And all these regulators recognize the importance of actually understanding fintech companies and allowing them to kind of get into the system by making it easier to get through regulation. And we do not have the same thing happen in the US yet. So, and unless you have, so fintech, insurtech, health, all these industries that are actually very regulated need to have the regulators sitting at the table for the industry to actually evolve and to see progress. And we don't see much of that in the US. So it's interesting to see that different things move at different speeds depending on the location. So I'm a little bit discouraged by the appetite of the US regulators to actually do something in that space. And then if you look at insurtech, every state has got its own regulatory framework, so that makes it even more difficult. So people are addressing different challenges in the different markets.
So you guys have locations all across the world. One is in New York.
Yeah.
In the States, do you then try to advocate for stuff like this? Is that something that's an active piece, or are you just waiting? Like how, like, I mean, it's frustrating to me. I'm not in this industry, but it's frustrating to me to hear that, you know, as a U.S. citizen, that we're not growing or we're not innovating on something because of regulations. And it seems like if other places across the world are doing it, we should at least be on par with that. Like, do you advocate for stuff like that? Like, hey, like you're missing out, or?
If we get the opportunity, absolutely. So we're either part of lobbying processes, or if we get the chance to talk to the regulators, we will. We try. We haven't been particularly pushing the US, but there's also other players who do similar things in the US, and everybody suffers from the same thing. So there is a well-known push that comes from multiple players in the ecosystem.
Very cool. How many different verticals do you guys have?
Jesus, we've got smart transportation, smart city, fintech, insurtech, digital health, food, energy. I'll probably forget a couple more and people will kill me, but there's probably about 10 different verticals globally.
And each location is tied to a specific vertical that they're good at?
Typically, yes. So we pick locations where we feel it makes sense. That's why our fintech program in the US went to New York and not to Silicon Valley, because that's where the industry sits predominantly, and the startups want to be close to the corporates, close to the banks. We launched the food program in Rome because there's a huge food industry there. So in most programs, we're really close to where the action is. We have a couple of programs that are not vertically focused, one in Istanbul in Turkey and one in South Africa in Cape Town, but that's mainly because the market is still quite new, quite fresh. So we start with a horizontal program, and then we verticalize at a later stage.
I think one thing that communities across the world miss is that they try to build industries or verticals in their backyards that have zero ties to it. So I really appreciate that you are recognizing where different verticals should do well and are doing well, and put a footprint there instead of trying to create fintech in San Francisco, basically. And I think all too many communities do mess that up.
Well, wherever we go, I think anybody should. They need to look at who are the stakeholders, who do they need to attract, right? Because it's not just the startups, right? You need to be able to attract startups. So startups will travel for the right reasons, right? But you need to have relevant mentors. You need to have angel investors close by who understand the importance of investing into early stage startups. When we launched our fintech program in Asia, we had a choice between Hong Kong and Singapore. But at that point in 2014, the Hong Kong community were not at a stage yet to understand from an angel investment side that you invest in tech. It was still kind of you invest in stocks and you invest in real estate, but the tech investment mindset didn't exist, whereas in Singapore you already had that. That's why we went there. So it's always a combination of factors, but you need to have a significant number of the boxes ticked for the programs to make sense.
How many boxes are there, would you say?
Well, you need to have a supply of startups. Actually need to have an ecosystem. You can't do this in isolation. Simple things like co-working spaces, meetups, et cetera, et cetera. You need to have industry presence because our programs are industry focused. You need to have some sparring partners. So it has to be somewhere where the industry has a focus. Having a pool of mentors to choose from is also important. And the mentors in the industry programs need to come from different buckets. So you need investor mentors and entrepreneur mentors and industry mentors, right? Regulators, we mentioned, right? So it helps when they're close by. And then, investors, both on the VC side, but on the angel side. Although the startups that come to our programs usually are about to raise their first seed round, we still give them exposure to a lot of VCs so they can understand the expectations and the language that the VCs are using. So when they come to the next round, they have already the discipline of metrics and understanding what the VCs are expecting. So you need the package. So at least 5 boxes you have to tick.
I like that. How many startups would be under that kind of bucket? So you said, you need to have startups, 50, 100, 2, like what?
Well, it's difficult, right? If you think that for every program that we run, we usually have around 300 to 400 applications, and then we select 10. So you need to have a big funnel to actually pick the cream of the crop, and even there, it's sometimes difficult to get quality.
Very interesting. Tell me about the program and how you guys do that with each vertical.
So the program is across verticals the same. It's a standard 13-week program. It's residential. It's very traditional from that perspective. We take 6% equity. We give the startups 15,000 US pocket money, and it's very important that there's no link between the equity ask and the cash that we give. So we don't do any valuation exercise. It's really just accommodation and pizza and beer money. And the startups have to relocate. They usually come from within the region. So usually more than half of the startups are not from the city where we run the program. And then it's a 3-month program where we focus on some lead startup basics, like getting them to validate the proposition, do their customer discovery. The majority of the startups in the program pivot one way or another, maybe a little bit, maybe drastically. And then after the validation, it's about building and selling and getting investor ready. And then we have a demo day. The demo day is very much built, so the model is a little bit different from the traditional demo days where we get the startups to pitch consecutively in front of smaller audience, so they actually have more interactions with the audience. It's very taxing on the founders, but it's more immediate in their introductions. And then they join our alumni program, so they graduate from the program, and then it's mainly about supporting them in their journey as they raise their first round.
Very cool. Why cohorts? What made you guys recognize that a cohort was something better than just ongoing?
First of all, it's a huge machinery that you need to run to actually give them the right level of support. You bring in a lot of people to educate, a lot of people to work, and that focus is important, right? I mean, the whole point about it being an accelerator means you have a framework that allows you to put a lot of pressure on the people. And doing this in a one-to-one is not the same, and there's no peer learning, there's no community that you build with the other founders. And usually, I mean, when we get the startups in the programs to review pretty much every aspect of what we do. And we know that the 2 most important things when they come out of the program, where they feel they got value, is the access to the industry, so to the corporates, but also the peer support and the network that they built with the other startups, the other founders. It's a bit like an MBA, right? So the program itself is maybe not the most important thing, but the network that you built in that time is what will keep you going.
Well, it's interesting because I think the university system, people are starting to question a lot more and more, and whether or not someone should go get an MBA or something like that. But when I think about it, it's if you could do something in 13 weeks instead of 3 years, 2 years, and actually get paid to do it, it seems like that's a better thing to do. I think education is changing. You're basically a school, right? Teaching people how to do this and then having that network in there. And so education is evolving, and it's finally getting something, I think, in the business world where these accelerators or incubators or any kind of programs like this are really finally teaching people real business tactics, but by people who have actually run a business. And so all too often, I think, in the business university world, the people that are teaching have either never actually run a business or just read a book and are 15, 20 years off of that. And so I think it's important that you mentioned that, and I think it's important that you guys make such a strong case that these people need to have people that have been there and done that.
You're preaching to the choir here, right?
In my backyard, I'm not preaching to that. Like, a lot of people are like, no, school's important. I'm like, school is important, but education is really the thing that's important.
Particularly on the MBAs, it's one of my soapbox moments where I could just go on and on about it. It's also the way we experience this, by the way, is that we sometimes get startups applying to the program, and I put the kind of the air quotes, because these are often people who had an MBA project and they think it's a cool idea to do a startup. And these are not the same people who actually took a risk to solve a problem. So we see the quality between the founders who come from a very academic background and the ones who've been in the business and who are really putting themselves out there. But in that context, one of the things that we notice is, because we do tend to attract two types of founders. So we get the early stage guys who really benefit from a structured process which gets them to focus. When we get the corporate types who have left the bank or left the insurer to do this, for them it's actually, they need to go through a bit of a brainwashing exercise to learn to become a startup, because they approach everything with a very kind of corporate mind. So we have to kind of manage the two groups in a slightly different way. But at some point they come together, because at some point they have to just look at the goal and deliver, right?
That's really, really, really interesting. That peer support is also something that I think most accelerators across the country talk about, and it's really that alumni, right? It's that fraternity, if you will, that sorority, if you will, and it's so powerful, because sometimes you'll see, and maybe you've seen it, where some of the businesses actually merge into one, and that team is actually very powerful.
You know what? This is an interesting one. When I started this, I assumed this was guaranteed to happen, and sometimes some cohorts you just don't get it. And you have to be kind of honest about this as well. You can orchestrate for serendipity to happen, but sometimes there's no gelling, or there's individuals who are disruptive, but individual relationships come out of it. That's always the case. And ultimately, we all get a kick out of the reason why we're doing this is because you want the founders at the end to shake your hand and say, thank you, you made a difference, right? And if you can do this with other people supporting, and the mentor relationships that come out of this, which are for me as important as the kind of the peers, then you're doing something good. But sometimes it's a tough life, and you don't get that chemistry and the magic to happen. But as long as the businesses get something out of it, then you still have a good feeling about it, right?
Yeah. What keeps you up at night? Like, what are the things that ache you, that pain you?
So it's a different thing. So I spend a fair amount of my time fundraising for new programs. Okay. So launching a new location, we're working for something in the Middle East at the moment. That's quite stressful, because that's not different from any founder raising money for their business. So that can be quite stressful. And then usually it's always the same. It's people issues. It's when the startups are not getting on within the teams. That's always a really, really kind of hard thing. Or you have a great team, and for whatever reason, they've run out of money, they're struggling, and you can see them fall apart. And you know that the next check is around the corner, but sometimes they don't make it. That's heartbreaking, especially if you actually like the people behind it as well. So it's a mix of things.
How do you help those businesses when that happens?
Well, they have to come to us to let us know what's going on. And sometimes they don't do this in time. So they really only come in the very last minute, and then it's really difficult. You can activate your network, you can call people, you can do whatever it's in your power, but sometimes it's still not good enough. But often, if they're smart enough to bring us in early on to let us know where they're struggling, if it's about people or if it's about money, then we can usually, through the network, and the network is huge, right? We can usually find a way of helping them.
we had a cohort, so we did 3 cohorts, and one of them basically completely failed, lost 90% of the money basically. Very emotional on me. And I remember when I told the investors, hey, basically I lost all your money. It was like I cried. It was painful because I felt like I failed, right? And I did, but at the same time, like you put this trust into these companies that they're going to be able to provide, and the way that you do that is you educate them and you get them in front of these people. And so when it does go under and it doesn't do what you want it to do, it's painful. What's interesting though is that one of the companies in this group went on and started a different business and ended up becoming a publicly traded business and trade between $50 and $100 million. And so we gave them, I think, 15 or 20,000 US dollars. And they had a decently successful business doing this, but they didn't love doing it. And so it's a marijuana social network. It's called Mass Roots. And they moved basically from Norfolk to Denver. And so it's interesting because I'm like, I guessed right. They were the right group, but it was the wrong idea.
Yeah.
And so I haven't done this, and I don't know that people do this, but do you ever think that maybe you could try and hold on to people for ideas for a long period of time and bet on that instead of the actual idea? Or how would you see something like that working?
We have taken teams into the program where we thought the idea is weak, but the team's strong. And we've done this repeatedly. The interesting thing is because our selection process, so what we do is from the funnel, we end up picking 20, who then come to an intense 3-day selection kind of extravaganza where at the end of it, us and our corporate partners jointly pick the 10 teams that make it into the cohort. And that conversation with the corporate partners is always very fascinating because the corporates would always get excited about product. And we have to tell the corporates that it doesn't matter how much you like the product. If we don't have faith in the team's ability to execute, it's not going to happen. So it goes in 2 ways. On the one side, we have to fight for startups that we believe in to make it into the program, even though our industry partners get not super excited by the idea, but we know that we can do something great with a team. Or the other way around, where we actually have to say, you know what, you might like it, but we really don't feel comfortable taking them in because there's no chemistry, the guys are not open to feedback, and we don't feel we can actually work with them. And that's super important because the corporates do this also for learning, right? For them, it's a really important part of their innovation journey to understand how to look at small businesses and how to engage with them.
I think that's very, very, very powerful. And it's hard to tell someone, hey, you have the right team, but bad idea. But even the opposite, hey, you have a great idea, but your team isn't the right thing. And to be able to tell your corporate partners, like, guys, like we're going to lose on this.
One of the things we do every time we have selection days is that we announce the 10 teams that make it, and then we sit down with the ones that didn't make it one by one and debrief them on the reasons why they didn't make it.
Of the final 20.
Of the final 20.
Yeah.
And it's interesting to see how those 10 losing teams, how they respond to it, because the smart ones take it on board and they work on it, and maybe they come back a year later, which we've seen happen, and then they're much better companies. And then you got the ones who give you attitude and they don't take anything on board because they know better. And then you know what, it was a good decision not to take them. So that validation we always get. And I think for me, it's always one of the hardest parts in the whole cycle because it's sitting down with 10 people who are emotionally devastated and telling them very frankly, very bluntly, giving them feedback, right? But yeah, good companies, good founders appreciate the feedback and they thank you for it.
So I think that's true though. If you're not coachable, you're probably not a good fit for a program anyway because you're going to have to get a lot of feedback from people.
Well, it's a thin line between confidence and arrogance, right?
Yeah, absolutely. What do you do with the 480 other applicants that apply but don't make it?
Well, usually there's a reason they don't make it, right? So we usually have like a top 50. We go back to some more due diligence on the businesses. It's surprising how people apply to a program and they've never really bothered reading the terms. Some of them are not comfortable giving up equity. Some of them are probably a bit too advanced. So it's a mix of things. Some come back, or maybe the timing isn't right, so we can refer them to another program because we've got the 5 locations, we run one every couple of months. So it's a range of things. There's no straightforward answer to this.
It's interesting how, I don't know if you guys are on F Success or anything like that, or someone can just say apply to this blanketly, and it's exactly that story that you're saying. So startupbootcamp.org. What's the future for you guys? It's going to be in every country in the world? Is there more industries to bring up?
No, definitely not every country in the world, because there's only so many markets where it actually makes sense. What we're looking to do is we're definitely looking at a couple new verticals, a bit more, less rock and roll, a bit more back office and boring, but more relevant.
Back office and boring, those become billion-dollar businesses.
Yeah, exactly. So that's the idea. So we're looking to launch a couple new verticals. We still have some locations where we want to grow. So China is definitely one of them. We just launched our first program in India, so we're looking to grow in India. But also we're looking at the model. We're looking at the evolution of the model. So one of the things we're actively working on is what we're doing now is still based on a model that started 10 years ago and that hasn't really fundamentally changed. I mean, we started verticalizing, we have that global network, but it's still, there's a few things that do not necessarily fly anymore because there's so much noise and there's so many people trying to do something in that space. So one of the things we expect to kind of go public with is our vision of the evolution of the model by the end of the year.
Very cool. If someone was interested in applying, they go to startupbootcamp.org. That's the best place.
Yep, absolutely. There's every live program is on the homepage, and you just click on a link. It takes you to Have Success, and you take it from there.
What's the best advice you could give to someone interested in becoming a part of Startup Bootcamp?
Best advice for a startup is always you should solve a problem. If you don't solve a problem, don't bother, and focus.
I love it. I appreciate your time today, Nektarios. It's been great, and look forward to an ongoing relationship with you in the future.
Wonderful. Thanks for having me, Zach. It's been a pleasure.
Absolutely.